Financial inclusion has really become a policy priority in the Arab world. If we look 5 years back, financial inclusion was not really that high on the agenda of financial sector regulators, and this has changed.
To understand the objective and the background of the project, we need to go 2 steps back, and we need to see the historical context. Back at that period, around 2010, we saw that in the MENA region, in a number of countries, microfinance sectors were growing. They were growing in an unregulated fashion. There were also a number of obstacles on the legal and regulatory side in order that these microfinance sectors could actually serve the population in the way that it was demanding. And that was the time when we saw a demand also to create something new. The objective of the project is to improve the framework conditions, the legal, regulatory and institutional framework conditions for microfinance in the MENA region.
The shift from microfinance to financial inclusion. In the past we talked about microcredit, micro-savings provided by microfinance institutions. Now we really see other kinds of financial services. We talk about payments, we talk about insurance, we talk about pension, and these services are provided by a broad range of different financial institutions. We talk about financial inclusion, including SMEs, but also households in the financial sector. What it finally leads to, and I think we really have evidence now for that, that it leads to higher economic growth. And we know economic growth, everybody benefits from economic growth. It leads to higher income, to more employment, but it's not only that. I think financial inclusion also has an impact on financial sector stability. We learned today at the conference that there are more than 50 countries today that have developed financial inclusion strategies or sub-strategies. And we have also seen that those countries that have developed a financial inclusion strategy, they have really achieved better outcomes in terms of bringing people into the formal financial sector. Here in the region, I think we have Jordan and Palestine now, who are really in the forefront. They're really the first countries here in the Arab world who develop financial inclusion strategies.
In 2011, the microfinance market in the MENA region was comparatively young and characterized by inadequate legal, regulatory, and institutional framework conditions, causing limited access to and usage of financial services by the population and micro and small enterprises. The joint efforts by the GIZ on behalf of the BMZ, the European Union, and the partners in Egypt, Jordan, and the Palestinian Territories have resulted in a countless number of achievements in the region.
In order to create jobs, we have to have financial inclusion, we have to have an accessibility to finance, and we have to have a complete strategy. We have to have the regulators, we have to have the whole financial market, we have to have the private sector with us, and hopefully by working together we would address that challenge.
In 2014, Egypt and Jordan issued microfinance laws, and the PMA licensed 6 microfinance institutions. 1 year later, Jordan, led by the Central Bank of Jordan, CBJ, embarked on its financial inclusion strategy journey.
We need to increase the number of the people who are dealing with banks much bigger than what we have. Only 25% of the population are dealing with banks. So we have a big job ahead. Financial inclusion is a good instrument, making finance available for everybody, making life more affordable for the poor and enable them to participate more in the decision-making process. So it's part of the social, economic and political process of the country.
The Egyptian Financial Supervisory Authority, EFSA, issued for the first time a microinsurance regulation, and the Central Bank of Egypt, as well as the Central Bank of Jordan, established a financial inclusion unit.
financial inclusion and in general financial services are very important in the country. They help to provide the capital for people to grow their business and also to help new enterprises to find the cash that they need in order to develop.
With support of the project, Egypt hosted in 2017 the Alliance for Financial Inclusion Global Policy Forum, and the PMA completed the regulations set for the microfinance sector.
The financial services providers or financial providers can go and access them closely, and that as a policymaker we can again encourage the financial service providers to do this.
2017 and 2018 were indeed two of the most memorable years. Jordan launched in 2017 as the first country in the whole region the National Financial Inclusion Strategy, followed by the Strategy of Palestine in 2018. In the same year, the PMA and the Palestine Capital Market Authority established the Financial Inclusion Unit. Egypt committed to the Maya Declaration, pledging to have the gender gap in finance by 2021, and licensed a total of 851 microfinance institutions.
Two further achievements resulting from the successful partnership in Jordan is that Jordan has now a fully regulated and supervised microfinance sector, and that Jordan was the first country in the MENA region to have launched a financial inclusion strategy.
At this time we have 15% of the accounts among the banking sector, it's like 15%. And in 5 years' time, and that's what we're working on a 5 years plan. We're aiming to 35%. If we could get higher, that's fine, but at least I want to make sure that we double the accounts number in the coming 5 years.
This year, The Economist assigned Jordan a leading financial inclusion score in the region, and the renovated Consumer Relations Hall in Gaza was reopened.
For example, look at a person who, let's say, lives in the capital and he or she would like to make even a small transfer to the grandmother who is sitting in a village up country. Without a payments facility, you would have to climb on a bus, or you would have to travel for 5 hours. So there's a huge security issue, and carrying the cash on a bus to the village is very costly. But if you have a mobile phone like this one, and you can make this transfer through the mobile phone onto the mobile phone of your grandmother in the village, she can go to the agent and cash in the money. But the regulator wants to regulate that and to supervise that. So smart policies mean make that happen, that this can happen in a safe and sound way. And this makes a huge difference in the poor person's life.
FIARI was launched back in 2017 at the Global Policy Forum in Sharm el-Sheikh, Egypt. That was a big launch at the very first GPF of AFI in the Arab world. So FIARI was a logical, I would say, logical continuation of the cooperation between the Arab Monetary Fund, the Alliance for Financial Inclusion, and GIZ. We had, in the context of this cooperation, already organized many high-level policy events on different financial inclusion topics such as gender financial inclusion, national financial inclusion strategies, SME finance, and so forth. So we felt the need to really formalize that cooperation. So what is the objective of FIARI? The objective is really to provide a platform for Arab central banks and other financial sector regulators in the Arab world to learn from each other, to learn from policy successes, from policy failures as well, but also to provide training and capacity development for FIARI members. What we also see most recently is that FIARI provides support for in-country implementation of financial inclusion policies.
In the new age, digitalization and datafication allow us to customize products and services down to the individual level and to make them available to clients whenever and wherever they need and want to use them. Overall, FinTech empowers the informal majority by making products and services more affordable, more appropriate, and more accessible for all.
To do that, we need policies that allow either existing or new providers to go downscale. We have all the talent and money that is needed to make it happen. The market is there, we just need to go for it.